Let's bring in Sheila Bair, who served as FDIC chair during the 2008 financial crisis. Sheila, great to have you with us. The stocks are telling us that we've emerged unscathed,
right,
that there aren't any more repercussions from what we witnessed in March. Is that the right message?
Well, I hope that's true, but I can't be sure that's true. And I think if people build that into their expectations, they'll probably be disappointed. No, I think there's going to be more bank failures. I think there are banks fail. We've got, a lot of them out there. And so people should get excited about that. If they're below the deposit insurance levels, they're fine. And if they're large depositors, they should understand what their bank's about and how risky their bank is. I know the government has tried to imply that all these deposits are guaranteed. They really don't have the legal authority to do that. But the vast majority of the banks are fine, are going to weather this. But yeah, there's commercial real estate loans, there's a recession risk, there's a lot of headwinds out there. And for the regional and community banks, the inverted yield curve, if that continues, it's going to become a real problem for them, I think.
Health of the consumer, that's been a story. Yep. All the bank CEOs talk about Brian Moynihan, it's always great. Listen, it's not just him, they all do it. But I don't think there's ever been an environment where they haven't said that.
Yeah.
I don't think it's great. What do you think?
No, I don't think it's great either. We're always trying to, get the consumer to borrow more, lever up, keep buying, and that's not the kind of growth that's sustainable. There's finally been some real wage growth. It's been negative since May, but now we've seen positive wage growth. That's great. They needed to catch up. So just, based on that data, to say everything's wonderful to consumer is just not accurate. Consumer debt's up, delinquencies are up, savings rates are down. Those are trend lines that are not great. So, no, I don't think we should be relying on the consumer to keep, fueling this. To the extent real wage growth does support demand as borrowing costs goes up, that's a positive, that's sustainable, but we don't know if that's going to be consistent. Hopefully inflation is on the downward trajectory now, which will support real wage growth, but we don't know that for sure.
We opened the show with a conversation about being bearish in a market that rallies. And it sounds, Sheila, like you're sort of bearish on the banking sector.
No pun intended.
I mean, I don't want to make you pick stocks or anything like that, but it does sound like you think that there are some real worries about the sector that are not necessarily being priced in right now.
I'm the kind of person who always wants to hope for the best and prepare for the worst. So I do think there's some real issues. And the Fed stress test, I published an op-ed on this last week. The true nightmare scenario is that inflation persists. Interest rates have to stay high. We go into a recession, so they've got credit losses, but they're also dealing with the impact of high interest rates. And that's the nightmare scenario we need to worry about. That was not stressed in the Fed stress test. So we really need to they are running more tests now. I don't know if they're going to be public or not, but those are the scenarios they need to look at. We need to be prepared. I'm not saying that's going to happen. I think it's plausible it might happen. And that's the whole idea of a stress test, to think of those plausible worst case scenarios and make sure the banks can withstand those conditions.
Government agencies were obviously caught off guard by what happened in March with Silicon Valley Bank and the other banks. Do you think they now have a better grip? You think they're in tune right now?
I do. I think, it's funny. They were focused on interest rate risk, but more from an earnings perspective than, these unrealized losses. If you had to actually sell these super safe government securities, what was going to happen? So I think they are focused on that now. I worry there will be an overreaction because, as I said then and I'm saying now, the vast majority of the regional community banks are fine. They're healthy. We need them to lend. They're important providers of credit to small and medium-sized businesses. So I do think there's a risk of overreaction. But I think they can weather it. One thing that the regulators haven't done that they should is these liquidity tests. So we talk about these capital stress tests. Those are the big public headline. The liquidity tests continue to assume that government securities, even if they are deeply underwater, even if you can't sell them except for significant losses, they're treated as highly liquid in determining whether a bank's liquid or not. That was a big problem with Silicon Valley. People said, they should have had these liquidity stress tests the way the big banks do. It wouldn't have caught it because it treats government securities as super safe for both capital and liquidity purposes.
Well, that's just wrong. The current stress tests don't have a time element. I mean, they allow the banks to work things out over the course of 9 quarters or something like that.
Yes,
it's not like a quick change in the environment that can trigger all these stresses.
Yeah, well, no, that's true. And I think, the inverted yield curve, I think, should not be underestimated as a challenge for banks. And that they assume that the immediate it uninverts within a couple of months, which is just not, normalizes in a couple of months, which is just not the case. if we have a problem, it's going to be more like the S&L days where banks can't find loans and investments to cover their deposit costs. Deposit costs are going up. So they start doing really stupid things, taking big risks to get high yielding investments or loans. And then what becomes liquidity becomes credit. And you've got a banking crisis that also is not good for the economy. So again, I think that's what, if we need to worry about something, I'm not saying it's going to happen, but if we need to prepare for something, that's really the bad scenario that people need to be alert to right now, I think.